Hey folks, how are things? It's Erica here, and it's nice to have you back on my YouTube channel. Today we'll continue talking about the psychology of trading, and I'll show you how you can make money here. So, do watch this video up to the end. In the description below this video, you will find a link to my Telegram channel, where you can ask me any questions you have. Besides, you will find a link there to my private Telegram channel, where I share my daily trading signals. Send me a direct message in my private Telegram channel and get my personal link for PocketOption registration, which will give you a 50% bonus on your deposit. And now, let's go to PocketOption and let's go trading. Today, we will trade the Australian dollar-Canadian dollar currency pair. The technical indicators that will help me today are the Donchian channel, the Williams percent range, and their rune. Let's open a down trade for 1 minute with $300 in, and that's why I did it. As you can see, we are trading on the M2 time frame, and the indicators accurately show signals about the possible price movement. And before entering the trade, the Williams line moved down, leaving the overbought zone, while the price also declined, and this situation gave me a signal about a possible price decline. The blue line of the rune, which is responsible for the uptrend, although it was much higher than the red one, but it also moved down, making it clear that the bullish trend was getting weak. And what we see, it seems that the price is in the area of the entry point of the trade. But do not forget, we are on the M2 time frame, and a small movement here is a large movement on M1. And the first trade brings me $273 of profit. Let's look for an entry point into the new trade, and in parallel I want to return to the topic of psychology of the future trader. We're interested in this topic, so I'll continue talking about it, and I will tell you everything you need to know. But first, let's open an up trade for 1 minute with $300 in. And while it's on, let's continue talking. I stopped at the fact that a beginner, let's call him that, has already passed 2 stages of his development, and the 3rd stage begins. And all in all, I remind you, there are 5 stages. Closer to stage 3, when hundreds of indicators, strategies, tips and books are already pouring you out, and your brain is already maxed out, suddenly one day it comes to you. It's not about them, it's not about the indicators or strategy that is important. There is no magic strategy or indicator, there is not and has never been. You can earn even on one moving average, on the stochastic, on the Bollinger Band, just with the candlesticks, going on trend lines, in general on anything. Another trade is completed, and it brings a profit of $273. So it's all about the psychology of trading, the ability to manage risks and time, not in arrows, rows and squares, which a child will draw on the graph. But let's open another down trade for 1 minute with $300 in. I made this decision because the price was approaching the previous resistance level, which the price could not break through 20 minutes ago. And despite the fact that it still overcame this level 8 minutes ago, I believe that the price may adjust downwards. And I think so, despite the data of technical indicators that say the opposite. But let's continue. And so, after learning about the psychology of trading, you start reading articles about risks and money management. And suddenly it becomes clear there are no guaranteed successful strategies or indicators at all. And as for our trade, as we can see, the price has increased a little, but just before the expiration, the price is declining. And our pocket is replenished with another $273. Such ambiguous trades just happen when decisions are made in the absence of supporting data from indicators. And yet, you're stunned. It turns out that no indicator in the world is able to predict where the price will go. They are all much more likely to make mistakes than to give a good forecast. The indicator is just a simple formula. It only shows the past, and it cannot predict the live market. By the way, the signal of the Williams indicator has changed, and I open a down trade still for 1 minute with $300 in. Observing the progress of the trade, I will continue. You're parting with the dream of a magic indicator with arrows and beeps. You understand it's useless to look for a super indicator. You need to think only with your own head and come to your own individual trading method, with its own time frames, expiration dates, charts, and trading volumes. You start to keep a trading diary, make a trading plan. Write down the rules and follow them. You study yourself, your reactions to successful and unsuccessful trades. You understand, if 2 or 3 unsuccessful trades in a row, the trades need to be stopped, at least for an hour, maybe for a day, and sometimes for a whole month. And our trade's coming to an end. Refund suddenly. Yes, despite the fact that most of the time the currency pair button was green, we could not make a profit. Don't get upset and move on. Now, you are learning how to work with drawdowns. You understand, it was because of the attempt to recoup that there were so many impulsive trades. There are so many attempts to see a trend where there is none. You have too often entered the trend over and over again, being fully confident that it will continue further. You were constantly trading on a price reversal and didn't even think about turning around. You gradually come to a system consisting of several components, which shows better results than other options. Do not forget about trading, and we will open another down trade again for 1 minute with $300 in. The reason for this decision lies both in the movement of the quotation chart itself, where we see that the price begins a gradual decline, and also, oddly enough, in the signals of the indicators. The line of the Williams indicator, having failed to return to the overbought zone, is now moving down, thereby indicating a possible decline in price. And so are the Arun lines, and both begin to decline at once, from which I concluded that the flat was approaching, but since its blue line was actively approaching the level of 50, showed me that the uptrend is significantly getting weak, and I decided to check it out. The price movement is somewhat similar to the last trade. The price was then increased, then approached the entry point again. But this time the trade ends with a profit of $273. As I have already said, the market is not predictable, and it is very important that you realize this and accept it as it is, without unnecessary illusions. And now the situation on the chart in terms of signals does not change, and I open another down trade for 1 minute with $300 in. And we will continue to analyze the stages. And so you come to some system of your own, but it can still give unsuccessful trades, but you no longer want to smash the monitor with your fist. You understand there is no one to blame for your troubles. It's just that the market behaved in such a way that the chosen system was not effective, and that's fine. Failure, drawdown, even loss of deposit, it happens to everyone. It's not a problem at all. We need to work further. We need to trade the system, not the market. We need to develop statistics. You start taking into account the balance for a week and a month. You understand, it is not important how much you earned on one trade or per day, and the balance for 1 month, quarter, and year. It's amazing, but we have another refund. Only 1 second separated us from the profit, and maybe even less. If the price does not want to go down, then it will go up. We will open an up trade for 1 minute with $300 in. This time, I did not take into account the data from the indicators because, as we have analyzed, they do not guarantee success, and we have already seen this when even a strong signal can lead to a refund and could lead to a loss of investment. But still, if in defense of the indicators, I want to say that such situations of course happen, but not very often, so that all these indicator signals are still guaranteed. We leave the trade for a while and return to psychology. It suddenly becomes clear to you it's all about trading discipline and time management, instability and constancy, that you know how to behave not only in case of profit, but also in case of losses. You're learning how to psychologically cope with failures. But look, our trade ends with a long-awaited profit of $273. And you understand that it was the irrepressible desire to restore the numbers on the deposit that most often led to disaster. Now you have learned the rule of money management. The trade should not be more than 5% of the deposit. 1 to 2% is better. You realized that 2 or 3 unsuccessful trades in a row is a stop signal. If you don't understand the market, if it goes against you, it's useless to try to recoup. And if you look at our chart, you will see that the market has really started to grow, and I'm opening a new uptrade for 1 minute with $300 in. The Williams also supported me in this because its line also began to grow and very smoothly. When there is a consolidation, this is more than enough, and the consolidation is really starting to manifest itself on the chart. Going back to psychology, now you will not recoup. If there are failures, then you need to stop and take a break. Make a few correct forecasts just on the chart, using paper to believe in your strength and test your understanding of the market. You finally understand why they recommend a large deposit and why it is so difficult to learn something with $10 or $100. Suddenly it dawned on you, money and risk management solves everything. Otherwise, there is no chance. You work further and more on to stage 4. And this trade is completed, and it brings us another $273, but with it comes the end of the trading session. Let's have a look at the results. So, I opened 8 trades in a matter of 11 minutes. Only 6 of them were a success, and unfortunately 2 trades broke even. This brought me a $1,638 profit though. A nice result? And then we dug deeper into the psychology of a would-be trader, and we only scratched the surface. And yet today, you were able to learn a lot of useful and meaningful information about the psychology of decision-making in general. And I do hope this will contribute to your independent binary options trading. And then again, it is essential that you carefully assess the current market situation before entering a trade. By and large, I recommend you to use indicators whose signals you can read, for this helps reduce the risk and make a profit in the long term. I would like to encourage you to keep trading binary options because, as we can see, the analysis techniques are super simple here. And before we say goodbye, in the description below this video, you will find a link to my Telegram channel, where you can ask me any questions you have. You will also find a link to my private Telegram channel, where I share my daily trading signals. And it gets better. If you direct message me on my private Telegram channel, you will receive a personal link for PocketOption registration, which will give you a whopping 50% bonus to your deposit for free. Now, dear friends, this is a pretty nice offer. And I do hope you found this video helpful. Thank you for being with me all this time. I hope you enjoyed the video. And if you did, please like it, subscribe to my channel, and click the notification bell so you don't miss a thing. That's about all for today. Good luck on the market. Take care, folks, and see you soon in the next video.